The Awesome Oscillator is for gauging market momentum. It's the difference between a 5 and 34 period SMA. These are the default settings, which usually can't be changed on most charting platforms, making it suited for short to medium-term ranges. If you're interested, you can search for further details on the indicator's calculations. As usual, the main focus here will be on examining real chart examples, rather than just outlining diagrams and going over theory. We'll see various uses of the Awesome Oscillator, along with preferred conditions for its application and cases where it fails and/or has limitations. A wide range of chart examples will be covered from various time ranges. No matter when you watch this or which charts you choose to apply the Awesome Oscillator on, information presented in this lesson can be of use to you. A simple way to think about this indicator is green bars indicate bullish momentum, especially strong when values are over zero. Red bars refer to bearish momentum, especially strong when they have negative values, and remain under zero for an extended time. Recently, the chart has shifted from bearish to neutral movement. And when values began to overtake zero into positive values, it coincided roughly with a break of this clear resistance area in price. When this indicator goes from negative to positive values, it's known as a positive or bullish zero-line cross. So it's not much of a surprise to see contact with the 1425 resistance level of price take place when values were close to and eventually crossed over zero into positive territory. With consecutive green bars with values over zero, bullish momentum was strong. With the recent appearance of a series of red bars, it indicates a shift towards more bearish momentum, especially as the value is lower towards zero during the decline of bullish momentum. Although values eventually go below zero, it's only for a short time, which is why there was no major drop, but rather a series of downswings. When price goes more range-bound, it's not unusual to see the oscillator move more close to zero without any major peaks to the positive or negative side. With values currently under zero, we see another bullish development. Green bars are heading towards zero, showing bullish momentum right around the same time price begins to rise. In addition to the indicator values crossing over zero, it would also be good to see price break over and consecutively close over this resistance level again. Overall, that's turning out to be the case. There's mostly strong bullish momentum when green bars are consecutively going higher, while price begins to go over this resistance level. When red bars appear, but values are still over zero, this indicates periods when bullish momentum is decreasing, but the overall uptrend is still underway. Again, less preferred conditions for the indicator to be seen clearly when values are close to zero without any major peaks. Often, such as in this case when price is in a defined range, values did cross under zero for a bearish period, but it wasn't strong bearish momentum due to the absence of any large red bars driving significantly lower, which makes sense since price was in a neutral to bearish period. In sharp contrast, here's a smooth positive slope where values cross over zero for another zero line cross in the positive bullish direction. It's followed up with green bars consecutively moving higher for a clear display of bullish momentum during some of the strongest phases during this uptrend's initial bullish breakout. Remember, a zero-line crossover will often be less decisive when price and the Awesome Oscillator are in a defined range. That's why this bullish zero-line crossover is less significant. In contrast, when price is reversing and crosses over a defined resistance, strong bullish momentum is going to have a defined upward slope above zero and continuing to rise with consecutive green bars. After that, the uptrend is in full force with bars remaining well above zero for the majority of the time. And after those minor dips under zero, they quickly cross back above zero into positive territory for a positive zero-line crossover in more of a continuation rather than reversal context. Now, with this negative zero-line crossover, there wasn't much success to drive down lower since price didn't break below these boundaries to complete a reversal range. And the bars on the Awesome Oscillator were small and only remained below zero for a very short time. Now, with price beginning to reverse down to a defined support range, there's a bearish zero-line crossover which tells us there's strong momentum behind this selling. But this natural delay at the support range is decreasing bearish momentum, as we can see with the green bars which still remain under zero. Fortunately, from a bearish perspective, there's a return of red bars, and eventually a decisive close under this support range. It's not unusual for these kinds of situations where there's a strong zero-line crossover, either bullish or in this case bearish, that start off strong, but quickly get halted as momentum begins to decline for a period. That's usually when price falls into a defined range, and the oscillator could even return back above zero for a short time. but this will usually be with small bars in the context of a larger downtrend that will eventually continue lower if there's a break of defined support accompanied by another row of red bars closing lower. Here are some more examples of weak zero-line crossovers in a bearish context. We see those familiar three characteristics where there is a defined range with small bars which only go under zero for a short period. This is a case of moderate bearish momentum. There's a decent drop in price, and the values on the oscillator go under zero. Bars aren't small, but they aren't exceedingly large. What is important is they continue to go slightly lower, and there are at least 4 in a row. And even though green bars appear, values stay under zero, and price steadily goes lower. All these features together are commonly found in a sustainable downtrend like this one. When a clear bullish trend has started, there will at least be some minor pullbacks along the way. In terms of the Awesome Oscillator, this will often be displayed with at least 2 red bars after a positive zero-line crossover to indicate a decrease in bullish momentum, not so much an increase in bearish momentum. During those red bars, price will usually go more neutral, or even slightly bearish. If it is just a minor pullback, eventually, the larger bullish trend will continue. Starting with the emergence of green bars, preferably ones that are higher than the last red bar to indicate the return of strengthening bullish momentum. And during these events with the Awesome Oscillator, it isn't unusual to see price steadily accelerate higher. Even though the indicator is above zero, there is constant shifting between red and green bars, while price begins to remain relatively unchanged. As we've seen before, these conditions make the use of the Awesome Oscillator more ambiguous. In this example, there is a defined range that eventually goes lower with a negative zero-line crossover. But in the broader context, it's only sustained for a very short time, before there's a shift back towards more neutral conditions that make the use of this indicator more difficult to identify the beginning of the next bullish continuation. There can be a bit of lag with this indicator, especially with a gap. But usually the bars will catch up and reflect the rapid change in momentum. That's why even though price was neutral to bearish right after the gap, there was a delay before the green bar suddenly surged higher on the oscillator. Along the way, we also see those familiar characteristics of the Awesome Oscillator's bullish saucer setup, where at least 2 red bars appear. While price remains almost flat to indicate a temporary pause in bullish momentum, prior to its resurgence when green bars move much higher than those few red bars, and price also begins to accelerate higher. This example ends with those ambiguous conditions that are common when a defined price range emerges, leading to no sustained bearish or bullish momentum that is reflected on the Awesome Oscillator with constantly changing red and green bars close to values of zero. When looking for various continuations with the Awesome Oscillator's bearish saucer setup, we'll be looking for a few green bars heading up to zero to indicate a brief pause in bearish momentum following a bearish zero-line crossover. It would then be preferable to see a series of red bars going lower than the last green bar, while at the same time, price begins to accelerate lower. Though as seen on this chart, these characteristics might not always appear at the exact same time as each other. With another bearish zero-line crossover starting a stronger downtrend, we can again practice looking for those few green bars appearing after the initial bearish acceleration. So far, this is turning out to be an ideal case. There are at least 2 green bars followed by the new red bar going lower than the last green bar. Red bars continue to form as price remains lower, but it's not an overly strong bearish continuation. Even before these more recent green bars appeared, the red bars were relatively flat and never went significantly lower. It was a similar situation with price, which was relatively flat and only slightly bearish. So even though there was the ideal bearish saucer setup that initially drove price lower for one day, bearish momentum was not sustained and the bullish momentum never grew significantly. The next decisive event only comes when there's a clear close under this defined support level that's accompanied by a steady decline in both price and values of the Awesome Oscillator. As it would be expected, the twin peak setup has 2 peaks. In the case of a bearish reversal, it would be preferable for the second peak to be lower than the first, and for these peaks on the Awesome Oscillator to coincide roughly with the time downswing points occur during the formation of the bearish reversal. This can then be followed by a negative zero-line crossover and an acceleration of the downtrend. Moving along, there's currently a neutral to bearish formation that has similar characteristics with 2 peaks that are almost level with each other. It would be preferable to see the second one slightly lower, but this is adequate, especially since the 2 peaks coincide with downswing points during the formation of this bearish reversal, and there's that acceleration lower with the zero-line crossover. But it ends up being quite weak, not being sustained for long, with the oscillator being close to zero and constantly fluctuating between red and green, while price moves into a defined horizontal range. In the broader context, this turned out to be a strong bearish reversal in the short term within a larger uptrend. These partial but less than ideal Twin Peaks setup characteristics did hint at this possibility of a stronger but shorter-term bearish movement. Since there was a negative zero-line crossover between the two peaks here, it was not technically a Twin Peaks setup. In contrast, the Twin Peaks that form here are more correct. The values stay above zero, and the zero-line crossover begins following the second peak. It's quite a sustainable downtrend since even when green bars appear, values stay well below zero. Naturally, when red bars on the indicator decline lower, there's an increase in bearish momentum, which is why they accompany steeper drops in price. And in between, when values briefly near to zero, it was quite important for those few days that there was no major positive zero-line crossover, which contributes to the stability of this rapid downtrend. Essentially, the Twin Peaks formation is like a declined double top formation with price, except in this case it's representing growing bearish momentum that will accelerate and be sustained with a negative zero-line crossover, with values remaining below zero and preferably continuing to decline lower to indicate a strong but relatively quick downtrend. Simple oscillator with lots of different setups, that's the Awesome Oscillator for you. For more on indicators as well as Fibonacci methods, follow Ascencore. Thanks for watching and have a nice day.